Just like the S&P, Litecoin has been in an upward channel since mid-May. I think it's about to end. Let me show you what I'm seeing. Hi, this is Tim from TradingStrategyGuides.com. Today's trade pick is a bear flag on the cryptocurrency Litecoin. So hang around and I'll show it to you. But first, we've got a few active trades to look at, and later on today's trading maxim. Happy Monday! Remember to click the subscribe button and hit the bell so you don't miss any of these great trade setups. Let's take a look at the active trades. Tesla is still looking good. We're waiting for it to break this 1020 level up here. We're also waiting for the parabolic SAR to track above the break-even level right here so we can start trailing stops on this. The Euro Canadian hit the stop loss right here on Friday. Sadly, it's been almost 2 months since we've taken a full stop like this. I wish I'd been paying attention to this close right here last week. I could have taken a smaller loss on this, but that's showbiz, right? Well, we got the sell signal on the Australian dollar, US dollar right here, slowly pushing down toward the target, or maybe a third of the way down. We're looking for a target of 67.48 on this. Hopefully it'll drop quickly this week. And that's it for the active trades, and let's take a look at today's pick. Litecoin has been looking bullish for a few months, but I think we may be in for some bearishness with the formation of this bear flag. Plus, you can see that it hasn't been able to push over the 50 level right here for quite a while. So I would watch for a sell signal on this one this week. Just to be sure we're all on the same page, a bear flag consists of an incoming downtrend like this one here, and then an ascending parallel price channel like this. A bear flag is a bearish consolidation, so I will only take a sell trigger on this. And the pattern is confirmed by a decline in volume and volatility down here. I measure the volatility using the average true range, or ATR, which shows the average length of the last 14 candles. And here's our trade plan. We're going to sell a daily candle close below the bear flag. On the breaking candle, we want to see the volume reach up to the volume average right here. If it doesn't quite reach the average but does reach 75% of the average, I'll open a half-size position to reduce risk. You can calculate the percentage by taking this volume right here, dividing it by this volume average, and you should get at least 0.75. If you don't get 0.75, I suggest you stand aside on the trade. The stop loss will be 1.5 times the ATR. The first target is 1 times the ATR. So let's say for funsies this thing breaks down here one day this week, and just ahead of the close we will sell right there. And on that day we'll look down here at the ATR, we'll multiply that by 1.5, we'll measure that distance above the entry. For our stop loss, we will measure 1 ATR below our entry for the first target. If after entering the trade we get a candle close back inside the bear flag, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout below the bear flag should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Typically I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we'll have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's today's setup on the cryptocurrency Litecoin. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today we're going to slide back in time for the maxim of the day. Tim's trading maxim number 33. A sequence of anecdotes is not data. An anecdote is a story. So, to paraphrase, a bunch of stories is not data. What does that even mean? Well, when you develop trading rules or modify existing trading rules, be sure you're using honest-to-goodness data to determine the rules. Just because that one time you shorted Bitcoin and lost a bunch of money, or that time you bought that tech stock while the moon was full and it went through the roof, well, that doesn't mean you need to avoid selling Bitcoin or always buy a tech stock when the moon is full. That's what I'm talking about when I say a bunch of stories. Your trading rules have to be based on statistically sound events that occur more often than not. You trade based on probabilities, and you cut the trade off if it stops doing what you expected to do based on the historical data you collected about that certain series of events. The trades I show you in my videos are based on patterns that I've used for years. No, they don't always work. But when the rules are satisfied, I get a statistical edge that allows me to make decent money on these setups. But let me tell you, I've looked at thousands of patterns on hundreds of markets before I drew that conclusion. I didn't just look at a few anecdotes. Remember our Litecoin trade plan for today. We're going to sell a daily candle close below the bear flag. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR. Your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And don't forget to sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out 2 or 3 trading picks a week from all different markets, and you'll get to see them first. Best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for new videos. Don't hesitate to ask any questions you may have. I'll either answer your question in the comments, in a training video, or both. And remember, the only stupid question is the unasked one. Don't miss the next installment of the Trading Education series on Wednesday when I'll talk about trading platforms. As always, thanks for watching, thanks for subscribing, thanks for hitting the thumbs up below. Have a great week, and I'll see you on Wednesday.